The Bank of England halted its long run of interest rate increases on Thursday, one day after a surprise slowing in Britain's fast pace of price growth. The central bank's monetary policy committee decided by a narrow margin to keep the key lending rate at 5.25%. Before, the BOE had increased rates for 14 straight times, trying to tame galloping inflation, but thereby adding more pressure onto the UK's already ailing economy.
Doctors walking out to demand higher pay. The UK has been gripped by strikes since last year. Rampant inflation, which has triggered a cost of living crisis, is at its core.
They've offered us a paltry sum of 8%, which is sub-inflationary this year, although they've tried to disingenuously disguise it as a pay rise, but it's not, it's a pay cut. It doesn't make a dent on the preceding 15 years of inflation.
Food prices soared 13.6% in the last 12 months, and record housing costs are piling pressure on UK households. Disposable incomes are dwindling. Since December 2021, the Bank of England has been raising interest rates to curb inflation. But that means higher interest rates for mortgages, and that hurts consumers. On Wednesday, UK Prime Minister Rishi Sunak announced new net zero targets. In an attempt to ease pressure on households, Westminster is weakening its climate goals. Industry responded swiftly. Erratic policy shifts are hampering the UK's ailing manufacturing sentiment. While the country has been a trailblazer for green policies, failed government action is hurting investments in some sectors, including wind energy.
They've warned Great Britain. They said be careful, the costs have risen, so if you want to realize those wind farms on time, you'll have to accept that the costs have increased somewhat.
The latest policy shift isn't expected to do much to attract more investment to the UK, but it may very well leave businesses and consumers in a twist.
For more, let's cross over to London and our correspondent Birgit Maass, who is standing outside the Bank of England. Birgit, has inflation in the UK seen its peak?
Well, the Bank of England has said that the inflation has actually fallen more since June than expected. So that's good economic news. On the other hand, unemployment has been rising slightly and economic growth was not as much as they want. So to find out more about the interest rates in the UK, we're joined by Kay Neufeld. Welcome to the show, Kay, from the Centre for Economic and Business Research, a think tank. Thanks very much. So, were you surprised by this decision, and do you think that we see an end of the rate hike and interest rates?
So I think after yesterday's inflation data, we knew it was going to be a very close decision. And indeed, 5 members voted for a hold in interest rates, 4 voted for the hike. So a very close call indeed. And what the Bank of England really is looking at is, on the one hand, the labour market. And here we know that unemployment has risen. So in the Bank of England's books, that's a positive because some slack is emerging. But the good news from yesterday really is that inflation in the services sector, core inflation, which hasn't shown any signs of moving in the right direction previously, that has ticked down in the data yesterday, and that has been enough, I think, to tip the scales towards holding rates for now.
So do you think this is the end of actually the rate hike that we've been seeing recently? I mean, it's still at quite a high rate.
It is a very high rate. They left the door open for another rate hike potentially before the end of the year. This was our kind of a main prediction before the decision that was announced today. I think the Bank of England is now going to look at the data, see if inflation is going to prove perhaps more sticky than anticipated, in which case we might see another rate hike. But I think the odds are on now that this might actually be the last rate hike that we're going to see, and the bank is now going to wait for that monetary tightening that we've seen over the last few months to pass through to the economy.
If we're looking at other policy decisions that recently made headlines, one is about green policies. So the Prime Minister Rishi Sunak has in effect watered down some of the climate policy ambitions, and he has earned quite a lot of criticism, even from business. For example, from the British Chamber of Commerce, they are mentioning that other countries are pouring billions in carbon neutral economy, and that they fear that Britain is lagging behind. So it's not exactly what you had hoped for.
So yeah, I think it goes to the core of really some very complex decisions which face a lot of developed economies really is kind of how are we going to transform our economies into net zero economies? How much is it going to cost, and who's going to bear the brunt of these costs? And yesterday, I think there were a lot of things to unpack. I think there were some positives. For example, the increase in the subsidies for heat pumps to £7,500, so that should help the uptick of the use of heat pumps. On the other hand, he removed the mandate for landlords having to invest into making houses, making homes more energy efficient. So that could really mean that the private rental sector will lag behind in the decarbonization of the housing stock. The key policy announcement, another one, was of course the delay of the ban of petrol cars, from pushing that back from 2030 to 2035. But again, here I think it's a complex field. I think our own studies actually show that there is quite a huge cost to society, to consumers of having that ban that early. You also have to see that the EU also has a ban in place that is only coming into effect in 2035, so the UK is now in line with that. On the other hand, of course, as you rightly mentioned, businesses crave certainty. They want to know what are the policy guidelines, what are the frameworks that we have to operate in. And then changing these guidelines from more or less one day to the next, 1 week to the next, is creating a lot of uncertainty, which we had plenty of in the UK already over the past few years. And this is potentially negative for investment here.
Yes, just a year ago, Liz Truss was a British Prime Minister for less than 2 months, and she really shook the economic establishment. She's now actually come out fighting back and said that the establishment was against her. What do you make of that?
Yeah, well, I think there are kind of different people can have different interpretations of what happened there. I think certainly her diagnosis of kind of the ills, was justified. We have a low-growth economy. We're stuck a bit in a low-growth trap, and something should be done about that. And you can argue about kind of cutting taxes, lowering spending to push kind of the economy into a more business-friendly, growth-oriented way. But I think it has to be said that the way in which she implemented her decisions, her policies, that was really not taken into account the economic environment that we were in. It was already, bond markets were stretched, the currency markets were quite volatile because we were in this rate hike environment. And then, the currency markets and bond markets just didn't take kindly to the fact that there was no real costing and no real plan of how we were going to pay for all of these policies. And, they kind of penalized the UK economy for that. But then blaming the UK or blaming the economic establishment for something like that, I think, goes a little bit too far. It's a little bit of an easy excuse for an unidentifiable, establishment or blob or whoever that might be. I don't really think it's a good excuse for that.
If we are sticking generally with the British economy, we've seen Birmingham, which is Europe's largest local authority, basically declaring itself bankrupt. Also, British people are seeing a lot of strikes, doctors, nurses, train drivers. What is happening in Britain?
Yeah, as I mentioned, the diagnosis also of Liz Truss wasn't all that wrong. We are in a low-growth environment. Higher growth would really be necessary and would be good, especially also higher productivity growth. That would be a boost to public finances. It would increase tax revenue, and it would also allow firms to pay higher wages if you have higher productivity, which, addresses some of the points, for example, around the strikes. But it's really a complex set of questions, and there's unfortunately not one silver bullet, not one quick fix. I think apart from growth that we need to stimulate, I think one thing that we really need to take into account is that we do need to build a lot. With this net zero transformation that we're seeing, we need to invest a lot in infrastructure. We need to invest in the energy grid and charging infrastructure. And I think the planning system in the UK is such that it takes too long. It's too complicated. We also see it in the housing market, not enough new supply, which means people are stuck in cramped accommodation. And I think this is really something where concrete action could be taken to improve things.
We've seen 13 years of Conservative government here in the UK. Now, next election, most likely next autumn. Do you see that the financial markets, that business is preparing for a Labour government to take over? The opposition is leading massively in the opinion polls. And what do you think would the financial markets and business make of a Labour government?
Well, yeah, I think, of course, businesses and markets know the polls as well as you do and I do. I guess here the key difference is that, there's always implied a bit of nervousness about the possibility of a Labour government coming into power. But the key difference is that now, Keir Starmer is not Jeremy Corbyn. Keir Starmer does not campaign on an agenda that is as left-wing and as extreme as Jeremy Corbyn did. And I don't think, also given the experience of the mini-budget, that he will go on a massively unfunded spending splurge all of a sudden. So I think, perhaps on the opposite, I think businesses perhaps crave a bit of certainty, and we've seen quite a lot of volatility, a row of successive Conservative governments coming into power, going out of power again, shifting policy priorities. So potentially a bit of certainty, a bit of a stable majority would be something positive actually for business.
So winter is coming around the corner. Last winter was really hard for a lot of British people, and the government had to help with energy costs. Do we see something similar this winter? What are we expecting?
So the government still has an energy price guarantee in place. It's set at £3,000 for the annual consumption of a typical household. But this is a fallback option, really, and we don't see a rerun of the situation that we had last winter when the UK and Europe were adjusting still to the effects of Russia's war in Ukraine and the volatility in commodity markets and oil prices, gas prices that resulted from that. So currently the off-gem price cap is set at £2,000, so around a third lower than the energy price guarantee. And the forecasts are that it will stay around there for the winter because global gas markets and energy markets have now adjusted to this new world where we're not importing a lot of gas from Russia anymore. We're paying higher prices for that. We're paying higher prices than pre-war, but it's not as volatile anymore, and we don't see that the British government would need to pay for energy bills this winter.
Britain sees itself, markets itself as this global economy, open for business, has also joined the Trans-Pacific Partnership, looking east. Do we see any of these benefits of leaving the European Union and instead looking other places in the world? Do we see any benefits of this so far?
Well, I guess you would have to look very closely. I think what you see predominantly is that for exporters it's gotten a lot more difficult to do business with the EU, which is still the largest trading neighbour that Britain has. So there's a lot of new red tape that businesses have to deal with. The chances of Brexit, of finding Britain's place in this new global world, they are there, but they are still there for the taking. And I think they still need to find their place also in a new world where geopolitics, geoeconomics is getting more important. We have China on the one hand, the US on the other hand, the EU also already a little bit in between. And Britain, can't fight its way alone. I think Britain needs to see kind of what alliances, what trading blocs it wants to belong to.
Kay Neufeld, thank you so much, and back to you in Berlin, Christoph.
And Birgit, before we let you go, I mean, we know that people in Britain have been dealing with a cost of living crisis for months now. What have you been hearing about how average people are coping with the economic pressure?
There's a real divide here in Britain. So Britain is really still a very wealthy country. It's the sixth largest economy, the United Kingdom. And there's enormous wealth in this country. But particularly for people on the lower spectrum of the income, things are pretty tough. And so, example, just yesterday, one of my friends has told me that she cannot afford the mortgage for her house anymore. So she's actually looking to sell the house in a rush. And people that specifically who are on low incomes, for them, there has been very, very tough. We've seen the rise of food banks, and that trend hasn't stopped. Last winter, when the energy prices were so high, really a lot of families had to decide whether they could heat their homes or whether they could feed their families. So heat or eat was the slogan. So it's not an easy situation here in the UK for a lot of people, and the effects of the interest decision for the Bank of England, they will probably not be felt immediately by a lot of British people, is what I am assuming.
DW's Birgit Maass reporting there from London. Birgit, thank you.